Hey guys, everybody, welcome to another live training session. Today we actually have Chad Lauer, and he and I have been friends for, I guess, more than 5 or 7 years now. And we met through real estate investing groups. And so I know that he has been doing real estate for probably 10 years plus, and he's got so much experience. And he himself is a coach, and he had just so much wisdom. I knew that I had to bring him on. And so I figured that we had a very small foray into private money last week, and I wanted to dive a little bit deeper so you guys can actually get some real hands-on tips about actually how to locate this money and actually how to raise money so that it can help you fund your real estate investing deals. Okay, so without further ado, welcome, Chad.
Yeah, welcome everyone. I'm Chad Lauer, and I'm thrilled to have you here. Like Trunk said, we've known each other. Gosh, how long has it been? What year was that cruise? Was that
Yep,
2016? Probably.
2016 or 2017, yeah.
Oh, that was a while back. I think at the time I was just kind of starting to build my team. I was actually going through some transition because I had a sales guy that I just hired, my first one of my first ones, and it was I don't know if you remember that. I think he went with me. Yeah, he went with me on that cruise. But it
Wow.
was a disaster. Anyway, so I met Trung there. We went on the cruise. It was a cruise through what Quest IRA, and it was about the topic of well, the reason why I went is I thought I could probably go raise a lot of money, but I think money was a big topic for that cruise. Yeah, because
Yeah.
there were a lot of IRA investors. But yeah, so that was so that's been we got 7 years. Yep. And I started real estate investing in 2013, so it's about 11 years now almost. Yeah, probably about 11 years. So, but yeah, so let's get right into it. So, yeah, today we're going to tackle one of the biggest hurdles in real estate investing and how to fund your deals without needing to rely on traditional banks. And I don't know about you guys, but today, I've heard a lot about interest rates and the banks being really high. With a lot of people can't really afford to buy a house that they used to be able to afford because the rates are so high, and there's a lot of challenges with traditional funding anymore. So, if we can set our own terms, we can write our own deal, we can potentially even beat the banks, which is really cool. And there's a lot of ways we do beat the banks just because of speed. So I want to ask you this. Let me ask you something about this. So how many of you have ever lost a deal because you couldn't get funding fast enough? So that's like a big one, right? So maybe you've got a deal under contract and you've gone through an agent, you've gone through a wholesaler, you've done your own marketing, you've cold called sellers, whatever you did, you knocked on doors, you got a property under contract, and the seller needs to close like in 7 days. Maybe it's 10 days, and you go to your bank and they're like, well, we need like 45 days, 60 days, and you can close. And then you're like, well, this person's like going to lose their house in a week. And so they just aren't used to that. That's not the typical approach. Banks are like pretty cautious when it comes to risk. So they're not trying to do anything real quick. They want to cross the T's, dot the I's. They want to make sure everything is, perfect for you with you and the property and all this stuff. And you just want to close. And you're getting this property at 30, 40, 50 cents on the dollar, and the seller needs to move. And if you can't do it, they're going to either lose the house or they're going to go find somebody who can. And that's just a terrible feeling. So I don't know how many of you guys here have ever been in that position where you've lost the deal because of that, or you've been on pins and needles thinking you're going to lose the deal. It's frustrating. It's really frustrating, right? So you find the perfect property, financing hurdles hold you back, and today we're going to make sure that never happens again. So raise your hand if that's you. If you're on Facebook watching, leave a comment, say frustrated in the chat, and just let us know that you've been there before. I know I have. Have you been there before, Chung?
Oh yeah, I mean definitely. There's been many times where having private money has saved a deal in the fact that we have wholesaled a deal to another investor and they couldn't get money.
Oh,
And they were going to lose the deal because they weren't going to be able to close on that deal, and so their fund lenders backed out. And luckily, we had our own private money lenders on standby just for that scenario, and so it saved the deal in that way. But we have definitely lost one or two deals just because we could not get a lender in time to execute because we mostly dealt with foreclosures, and foreclosures tend to have a very short timeline. And when you deal with that kind of turnaround time, you have to have your eggs in a row and your ducks in a row. I mean, and your lenders lined up prior to you ever start thinking about, trying to get some of these kind of hot deals like that.
yeah, that's for sure. I think most of the deals I've ever got under contract, we've been able to close did with our funding, other than early on when I was just like, I remember when I was really new, I was meeting with a broker and he was showing me a lot of properties. And, I'd had several agents show me properties anyway. And I thought, well, I asked him this question. I said, I have this amount of cash. I actually had a decent amount of my own money. I said, how can I get funding? Because I want to make this money go as far as I can. I just want to get a bunch of rental properties and be able to use it to, get enough properties to really make a constant living with passive income. And he's like, I don't know. I'm not sure. I was like, you're probably going to have to go. Because I told him my problem was this. I sold my business and I got this new business now that's real estate investing. And I have this money, but I don't have income anymore. Like I sold my business. My income's gone. So where could I get loans at when I don't have any income? I could show the bank because the bank's going to want to see my W-2s, my tax returns. And if I tell them I used to make money, used to make a lot of money. Now I don't make any more money, but I have some money that I may not be bankable. And he's like, yeah, you're probably right. So he just like didn't have any answers for me. And if I was,
Yeah. Yeah.
and I knew what I know now, I could tell him, where to go. But yeah,
Yeah,
so
that's a big thing that so a couple weeks ago, Chad, I know you may not have known this, but we actually spoke with a real estate agent that was more investor focused. And this kind of goes back to that training we did where, when you have the traditional agents or traditional brokers that deal with purely traditional mortgage banks and things like that, they are not familiar with the alternative lending practices and these private money loans and hard money loans that we're going to be teaching you guys about today, that can help you get some of these deals under contract and actually close on them. And then down the road, if you guys want to flip it, then that's possible. But also you can refinance into a more traditional loan down the road. But in order to execute some of these rehab deals and deals that you want to fix and flip, using private money as well as hard money lending is really the most straightforward path, unless you want to just come out of pocket your own money, which not many people go have 100 or 200 grand just sitting around in the bank doing nothing. So go
yeah,
ahead, Chad.
exactly. Yeah, no, hey, I was going to mention, I just wonder if you could go on our live stream inside of the group and comment at everyone just so everyone knows we're live. And if for everyone who is watching, if you're watching now, would you comment live? And if you're watching the replay, or comment replay. But do you know what I mean, Trung? Or maybe I could give you the link to it.
Yeah, I'm writing a post now.
Okay, good. Yeah, I would just comment on the actual live stream if you can, and add everyone there because I
Okay.
want to make sure people know where to find it. Because I'm not sure if you just go to the group, you'll even see it. You'd have to go to the event itself. It looks like so. Here's the link in the chat if you want it. So you have to go to the event itself. It looks like. All right, yeah. So I'll just keep on going. Thanks for doing that, Chung. Yeah. So let's talk about the power of private money. So imagine no longer relying on the banks and you'd be closing on deals faster, not worrying about whether or not financing will come through. And every time you find a great property, you already have private lenders lined up, ready to fund your deals. What would that mean for your business? What would that feel like? I've actually been there. I've been in the spot where I've got multiple lenders lined up and actually some of them are feeling a little left out because they don't get the deal. I send it out to 3 or 4 of them, maybe 10, and one person gets the deal and everyone else is like, well, I guess I gotta wait to put my money until next time. So here's what it would look like. You find high-end properties and within days, your private lenders have given you the green light, no paperwork, no delays, and you're in control of the deal. And actually, I've had a private lender that actually replied to one of my emails. I don't send them out. I don't mass email people. I only email my vetted, people who are private lenders that I work with that are actually, we've agreed to work together and they're ready for my next deal. But I had one of them actually fund a deal in 11 minutes because I sent the email out. I actually created an automation where anytime I have a deal, I just push a button inside of my software and it sends out my deal to every one of my private lenders that I have in there as a private lender. And one replied in 11 minutes, which I thought was really cool. It's a $500,000 loan. He's like, we want to do it. So that's pretty cool.
Yeah, no, I think we actually, when we were doing a lot of real estate deals ourselves, we actually had a hot list of lenders as well as it's just a wholesale buyers that can lend as well. And so
Yeah.
when we had a deal we had to fund, we sent it out like a mass text to 3 or 4 private lenders that wanted to work with us, and usually within an hour we had that funded, or they were like, hey, we look at the package, everything looks great, we're on board, let's go. And I think it's something that is not going to happen right off the bat. It's obviously something that you build with relationships just like anything else, where, when you do the first deal, um, you may not get as favorable rates, but as you work and build a relationship with people, they're going to trust you because you've executed on one or two deals, and
Yeah.
then you're going to be more likely to fund you very, very quickly.
Well, let's hold on a second because that's one of the, I think, the common misbeliefs. We might not get good deals when we do our first loan with somebody. So what I
Okay, well, that's
so
okay.
I'm going to go through that in the training here a little bit, but I don't
Okay,
want to I like to break beliefs, and even with you, Trung, if there's a belief you have that's holding you back, that's what I call a limiting belief. We're basically saying to ourselves, it's okay that if we just don't get very good rates the first time around, I'm going to crush that, smash it, shatter it into a million pieces, and we're going to put
awesome.
together a way to actually go out and get deals as low as. And my best private money loan, first loan I ever did with somebody, 4%, no points, no payments for a year. How's that sound?
Man, I'd love
That's a
that.
private loan, right? So and that was back when rates with the banks, if I wanted to go buy a house I can move into, I probably could have got a 3 or 4% loan, but not for a investor, not for a flipper, not for a, buy and hold deal. And that was actually a property I bought for buy and hold purpose. And at 4%, no points, no payments, no fees, right? So we'll talk about how that works, how that could work. Okay. So, you know, let's see here. How would it feel if you never had to stress about funding again, to be the one calling the shots and securing your deals without waiting for the bank's approval? With private money, you never miss out on a great deal again. You grow your portfolio faster, or your flips, or your buy and holds, your Airbnbs, your wholesale deals. Have plenty of those to flip, plenty of those to put in your buy and hold or your passive income portfolio, and increase your profit margins and have the freedom to invest on your terms. So who's ready to make this a reality? Type "I'm ready" in the chat if you're ready. Hey, we're actually getting some people coming in here. I'm seeing some people there. That's awesome. Okay, cool. We weren't seeing anybody earlier. So I want to get you guys going here. Trung, Eric. Okay, that's me. Okay. Yeah, we got Eric here. So Eric, yeah, you're driving. Okay, well, you're probably not gonna be doing a lot of commenting, but if you would, yeah, just participate if you can. If not, that's cool. Yeah. So one thing I want to mention too, you mentioned wholesalers earlier there, Trung, and actually wholesaling a property. Now, one thing that people don't realize is that your cash buyers are also potential private lenders. It's all in how you frame your deals and how you present to them. Because someone who's got a pocket full of money or a bank account with cash that wants to go buy their next deal or their first deal could be someone who maybe they're just a little nervous about real estate investing, has the money, but would rather work with somebody else who's going to do all the work and manage the contractors and have all their, all the stress and headaches of the flip. And they might just want to put some money in the deal and look over your shoulder as a potential, even like almost a student mentee mentor relationship, right? And that's how I mentioned earlier. So several of my deals that I got, several of my deals that got funded early on when I was looking for private lenders, I approached that way. And also I got them in to the idea that, hey, I flipped a few houses, even if I'd only ever flipped one or two, or maybe it was my first deal. Like, at some point I've flipped one or two houses or more than they have. And I'm able to say this, hey, so like, let's role play, Trung. Hey, Trung, how would you like to be able to participate in one of my deals and look over my shoulder, ask me any questions you have, and just kind of learn from my experience as I go through this deal. What would that be worth to you? Would that be something you'd like to
That'd
do?
be awesome. I mean, it's pretty scary to try to do your first deal, So yeah, man,
Yeah.
if you're willing to let me do that, that'd be amazing.
Yeah. So see there, now he's saying, well, if you're willing to let me do that, that would be amazing. On the other end of it, it's well, Trung, you could definitely participate in my deal. I know you're looking for one to buy for yourself, but how about this? What if this time you put your money into my deal? I use you as a private lender. We work that way. And then later on, once you get comfortable, you can do your own deal. And I'll even bring you some of my own leads and my deals I get. So I'm buying properties at 30 to 50 cents on the dollar. How would that work? How would that sound?
Oh man, that's awesome. Yeah. I mean, finding
Yeah.
deals is the hardest part of real estate. So if you
No,
can kind of help give me some leads, then that just makes my life so much easier. Yeah.
no, Trung, right now, where's your money parked at? Do you have it in the bank or where's it at?
Yeah, just ready to go buy a deal, man. So I
Oh,
got
it's
to
in the
keep
bank.
it somewhat liquid. So
Yeah.
yeah, it's making me 1%.
1%. Okay. Well, what if I could double or triple what you're making now and you could still learn from my experience? How would that sound?
Oh, that would be awesome. Yeah.
Yeah. So maybe you'll do, maybe like, well, I mean, a little bit more. We're looking at 1, 2, 3, 4%, 5%, 6%. Maybe he'd even do it for free. You might not feel good about that, right? Maybe you want to make sure they make some money, but you could definitely beat what are hard money lenders these days? I don't even know. But back when I first started, bank rates were even low, they're
12,
charging
12 and 2 right
15%
now.
and 5 points. Yeah. and that was for some of them. Yeah. So 12 and 2, I mean, I figured they've gone up even higher, but it depends on who they are. So, um,
Yeah. The rates
yeah,
I'm hearing is anywhere from 10 to 12 to 10 to 13, at least in the networking groups I've been to, and about 1 to 3 points. So two
yeah,
points has been what I've heard the most. But
yeah.
yeah, that's a lot of interest.
So the thing is too, have you ever done the math on what the points actually cost you? Have you annualized that before?
No, I haven't. Yeah.
So think about it, okay? So let's just talk about the last time. Okay, I think I even saw you mention this in maybe one of your trainings or in your group in a post or something. I think you had a deal, maybe it was a deal you posted where you had like all the numbers and you talked about the amount you paid for funding on that deal. What was it? Remember?
So I think overall it was about 4 or 5K in terms
No,
of
no, no.
interest
Like,
plus.
yeah, percentage and points. What was the number?
I think it
Remember?
was 2 points.
Was it 12 and 2 or 10 and 2?
It was 10 and 2. Yeah.
So let's just say so it's 10 and 2, so 10% APR, right? So if you used it for a whole year, you'd pay 10% of the amount you borrowed, right?
Mm-hmm.
Okay, so and how long did you have the money out for?
3 months.
So 3 months. So that's a quarter of the yeah, for 1/4 of the time, 1/4 of a year, a quarter. So you had it for 3 months. Now at 3 months, and you paid 2 points. Now take 2 points times four, because if you were to say
That's another
that,
8%. Yeah. It's like, yeah.
yeah, so now you're paying you paid 18% APR, even though you only use it for 3 months. So points actually are more expensive the shorter you use them for. They're a better deal the longer you use them. Does that make sense?
Yeah, you just spread out the 2 points all the way for a whole year versus just doing it for, yeah, because every time you take out a 3 month loan, you're paying 2 points again.
Yeah. Yep. Yep.
Yep.
So if you'd have done that same loan 4 times during the year, you'd have paid 18% over that year on the money you borrowed, all the money you borrowed. Well,
Hmm.
on one, I guess it'd be if they're all the same value, you'd count it on like one deal basically. But it'd be like saying, hey, I used say $100,000 4 different times, but I used $100,000 for a whole year. You'd have paid what, $18,000, right?
Yeah.
On every hundred thousand
Very
dollars you borrow.
expensive money.
Yes, exactly. So if you just took the 2 points off, instead of paying $18,000 over the year, you'd only pay 10, even if you did 4 deals, right? And you used 100,000 each time.
Hmm.
So does that make sense? Yeah. So we can get those now. If we would have got down to 4%, 6%, 8%, most of my loans I've done at 4, 6, and 8%. Sometimes I've gone 10 if I was in a bind and all my best lenders were
Um,
tapped out, right?
Yeah, yeah. Hey, everybody, just so you guys know, I know some of you guys are probably new beginners, and real estate beginners that maybe not understand loans and stuff like that. So points are basically a percentage. Each point is basically 1% that the loans lenders charge you just to originate the loan. So basically, it's like a fee, right? So they basically would charge you one. Sometimes they charge you zero, but they charge you 1, 2, up to 3% of the amount that they're lending you. So if it's $100,000 loan, they can charge you up to $3,000 just to originate the loan. That's not anything else. That's not even the interest you're paying. That is just origination fees, and it's just a fee that they make money on. And so if you can negotiate that down, because it's somewhat flexible, it doesn't cost them $3,000 to originate this loan. It's just extra icing on the cake for them. So that's very much negotiable. And definitely negotiate the best you can, because that is quick savings immediately, because you pay that when you close on the loan on the first end of the when you first close on the deal. So just for people, in case you aren't confused about what points mean, because when I first started doing real estate, I didn't know about the terminology. And I think when some people start throwing that terminology around without actually explaining it, some people kind of get lost. So I
Yeah.
hope that helps people.
That's a good point, and I probably should have thought to put some like definitions in here and like that type of stuff. But yeah, we can do that as you see something that maybe is that whole like industry lingo that people don't get. We might, yeah, definitely bring it up. Now let's go through some steps here, and this is going to be a bit of a I don't know. There's going to be a lot of things I can't cover right now just because we don't have time. We have about an hour here. We're about 20 minutes in, but I'll also have another training for you later at the end of this training. We're going to drop a link where you can go and download my script I use when I talk to private lenders, and I've also got a little role play I created where it kind of walks through what I say to private lenders and how I get them on board with the whole idea and kind of the process. So yeah, and if anybody needs either further training than that, there's other things you can do as well if you'd like. I mean, I don't know if you teach stuff on private lending and how all that works as well, Trung, and I do in my house
I
buying
will
master
be. Yeah,
as
I
well.
definitely will
Okay,
be
good.
covering more. And I'm sure that we'll definitely have you back for some more training as well. So
Yeah.
um, I think everybody's going to get so much out today. And then I think they're going to want an encore.
Yeah, sounds good. Sounds good. Well, and yeah, yeah, that will be great. So yeah, first step. Okay, wait, let me just make sure I have my notes ready here because yeah. So the first step you want to do is build credibility with a private lender. So you need to build credibility with your private lenders by positioning yourself as trustworthy and experienced investor. Now, sometimes they say fake it till you make it. I don't suggest you lie to people, but there's things you probably are in a position where you've got more knowledge and experience, even if you've just done a little bit of training, to where you're ahead of a lot of people. So lean on that. Lean on your network of other investors you work with, like Trung, myself, other people that you work with, and borrow our credibility too. You're a part of a network of investors who do hundreds, if not thousands of deals. And maybe this is your first one, maybe it's your second one. You can tell them that. I would also, though, use your experience and credibility, and don't discount yourself. Don't let your negative self-talk get in the way of you having success. But start talking like you're successful investor. Now, when I first started investing, I was like having this question in my mind. I'm like, okay, well, I just became a real estate investor. Am I really a real estate investor? Like, I don't feel like a real estate investor. I've never invested in properties before yet, and so you have these things saying that in your mind, but one day it goes from never having done any deals to having done some deals, and all of a sudden you're a real estate investor. And that takes really, that identity shift happens wherever you decide it happens, whether it's when you do your first deal or even when you start meeting with your first seller or start having that first private money lender conversation. Like, some point you become a real estate investor, and it's all in your mind of when that is. So when the lenders trust you, they'll be eager to fund your deals. Building credibility means having a track record, a clear strategy, and being transparent with your numbers. So make sure I think some people are afraid to even show the lenders how much money they're making on a deal, but that's one of the most important things you can show. And like you said, maybe in future trainings, we can cover things like how do you fill out a finance request template to request funding, and what all do you show the lender, and what numbers do how do you outline this so they know what the money is going to go toward and how much money you can get back, or how much money you need to actually borrow and what you're going to use that for. So if you don't build the credibility with the lenders, they'll hesitate and they may turn you down, offer poor terms, or avoid investing with you altogether, leaving you dependent on banks. So make sure that you don't let yourself feel in a way that's not going to allow them to want to work with you. Don't present yourself in a way where you're not confident. Okay. So present a clear, compelling pitch. So presenting a clear, compelling pitch means showing lenders why your deal is a win-win for both of you. Okay. A well-structured pitch gives the lenders confidence that their investment is safe and that you've thought through the deal completely. So the lower you're buying the property for compared to the value of it, what we call a ARV, after repair value, another terminology thing. So after repair value is what you intend to sell the property for, what you think the property will sell for, what your evidence shows that the property will sell for after your renovation is complete. You can look at comps, the comparable sales in the area, and see what other houses that are similar size and shape to that have sold for once they're fully renovated. And that can give you a kind of a crystal ball, a way to look into the future and see what will my property possibly sell for. So let's just say you find a comparable property with an ARV, after repair value, around say 300,000, and you're buying a property for 100. Well, private lender looks at it and says, wow, I mean, I'm getting to put my money in on a property where I'm going to be in a first lien position, which means they're going to be the only borrower on the deal, and they're going to be sitting there with $200,000 equity in the way of anything bad happening. So if anything happened and they had to take the property back and sell it, they would be able to pay back themselves and even make a profit probably. So, if the lower you're buying these properties for, the less risk it is to the lender, and the more, they should feel like, hey, I mean, I don't know about you, Trung, but if you could buy something today for $1,000 and sell it for 3,000 tomorrow, would you want to do it?
Pretty much all day.
Yeah, every day, all day, as many times as you can get $1,000, right? And so it's like that. If I can get a $300,000 house for 100 grand, even if it needs some fixing up, and I could sell it tomorrow for 150, 200, I'm in. Well, where do I sign? Like, I don't need to know much else, So that's really the key. Then becomes, now, how are you going to get leads, marketing, deals? How are you going to get sellers to sell you properties low enough where you can be in that position? And that's another whole nother training for a whole nother day. But that's also a really great thing to do, is to get your own marketing going, get your own leads coming in, so you can have properties at deep discounts. Okay.
Yeah.
So if your pitch is unclear or weak, lenders might lose interest, leaving you struggle to find funding when you need it most. Okay. So step 3 is going to be build a long-term relationship with lenders. So building a long-term relationship with private lenders ensures that you have ongoing access to funds, not just a one, for one deal, but for many. So we want to work with these lenders and kind of like, structure it in a way, or even just like present the idea to them that we want to work with you long term. We want to use your money over and over and help you make a lot of money while we're making money, right? And then, so a lot of some of these lenders will just be like, hey, I don't want the money back. Like, put it into your next deal. So you got one deal you're doing, your lender puts the money in, you get the house all fixed up, you sell it, and then you take their money and put it into your next deal. And it may go back to them momentarily, or however, it may sit at the title company or however, but that's kind of where we want to be. If we have a handful of those people that are always sitting ready to put their money into our deals, or we already have their money in our deals and we could just recycle it, we're in a position where we almost never have to go look for money again. And you don't need a lot, right?
Yeah.
Most markets.
Yeah. One thing I want to point out here, guys, is kind of have to understand with private lenders is they usually have a big chunk of cash sitting on the sideline ready to lend. The problem is, you have to understand their psychology compared to what you're doing as well. And this is what you can use as your leverage, is the fact that if they have their money sitting in the bank, it's not making them any money. So they are wanting to lend the money out and wanting to lend it out longer than shorter, actually. And a lot of times when I have asked for less money, they're like, no, 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 can you take up to 70%? Because when that money is sitting there, it doesn't matter if they're charging, say, 13%, but if that's money sitting in their bank for 6 months because nobody's borrowing it, they're not making any money on that money. So they would probably, a lot of times, lend it to you for a lot better if they can get it used for a lot longer time because they actually end up making money. So you kind of have to understand that a lot of these lenders actually want their money to be working, not sitting in their bank. So they have no incentive to keep it in their own bank account, just making 1% interest or making no interest, right? So kind of understand that as well. And that's why a lot of them, when you lend and you borrow, they want to work with you over long term because it helps everybody minimize their risk and build a relationship. So I think everybody wants that relationship to work, right?
Yeah, yeah,
So
yeah. So, when you build a strong relationship with lenders, they'll come back to fund your future deals and may even offer better terms, like Trung was saying earlier. But I want to get the good terms from the beginning as well. Now, if we can get even better terms, great. Um, the more they get to know you, the more they trust you, the more they're going to be willing to fund your deals. Like one private lender I met with him. So he saw me in a newspaper article. I had an ad we were running in the newspaper, and he saw it. He was a banker living in Iowa, and he was retiring, but he had been doing loan origination. So he was like I think he was the president or vice president of the bank. I don't remember which, but he originated a lot of home loans. So he said, I know home loans, and I want to work with an investor who I can take my personal retirement funds and I can use those to fund the deals. He had several $1 million that he was wanting to put into play. And we met for coffee one day. I told him about what I do, and he committed at the end of the meeting to $500,000 to try me out. So that was pretty good because, $500,000 in Kansas City. I mean, at the time we could buy houses for, sometimes I'm buying a house for 25, 50, 100,000. Sometimes they're 200,000, but most of the deals I was doing, I was buying properties usually from 100 to 200,000 pretty much is about what I was buying them for. And so I would probably borrow, maybe 150 to 250,000 or 300,000, depending on how much I needed for the rehab. So for the renovation. And so I thought, well, shoot, he's starting me up with enough money to try to do 2 or 3 houses at least, and that's pretty cool. And so, but he had credibility, saw me in the newspaper, saw my advertisement, saw a big write up, and he said, well, this guy's out here buying houses. Needs somebody to fund him. So, but later on, he ended up funding a few other deals, and we ended up having more than $1 million at a time out with him, just off of a first relationship. And shoot, I could probably do at the time 10 houses if I was doing all $100,000 houses, or 5 to 10 houses is enough. Is how many I could do with that amount of money. So, like we talked earlier, depending on your market, your price points, if you have lenders lined up and you have, say, 2 or 3 lenders who have $2 or $3 million a piece, then you can almost fund deals nonstop without having to go look for anybody else ever again. Unless something happens to one of them. But so without a strong relationship with these lenders, you'll be stuck consistently looking for new lenders, slowing down your deal flow and growth. So Type trust in the chat if you're ready to build credibility with lenders. Maybe they'll do that later when they see it on the replay. But yeah, or maybe Eric will do that for us. Okay, so I've got another, I've got some really juicy bits here now. I've got this section of our training, private money tips to secure deals faster. So documents and protection. So we're going to get into some other stuff. Well, I think I do have some definitions here, so hopefully we do cover it deeply. So when working with private lenders, it's essential to have proper documentation to protect both parties and make your lenders feel secure. And these are key documents to have in place. So you want to have a promissory note. So a promissory note is a written promise to pay your lender, clearly outlining the terms of the loan. Okay, so that means like the promissory note is separate from the mortgage. Most people hear about mortgages, like, do you have a mortgage on your house? People will say, or, you know, like, how much is your mortgage? But nobody ever says, hey, what's your promissory note? You know, do you have a promissory note? Or how much, what does your promissory note say? Because the mortgage is just it's just the piece of paper that gives, ties the collateral, the property, to the loan. So it basically, it collateralizes the property into the loan. The promissory note's what says, hey, my payment's $1,000 a month and I pay 6%. And if I don't pay, you know, blah, 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 blah. But so there's also another thing you want to have in place for these private lenders, and it's called a hazard insurance policy. So you want to make sure your lender is listed as a loss payee on the insurance policy to protect their investment. So basically, you're going to have insurance on your property, and if the house were to burn down tomorrow, the lender gets paid back first. So you can tell them this, hey, this is how I'm going to protect you. We're going to have a promissory note. We're going to have a mortgage or deed of trust, depending on the state, and we're going to have hazard insurance policy. And now you can take it or leave this. I usually never bring this up, but if you feel like you have to, or you feel like maybe it would, or someone says, hey, I would lend to you, but I need a personal guarantee, then maybe you want to do it. But I've only ever done that one time. And it was because the lender kind of twisted my arm to do it after, yeah, anyway. But we've done a bunch of deals with private lenders and never had to do one with, except for with one lender. So, but it adds an extra layer of security to personal guarantee and the repayment of loan. Now, I read a book. I think it was one of Donald Trump books back in the day when I first started my first business, and he said, "Don't personally guarantee anything." So I took that to heart, and when I was signing leases for my business, I've signed a lot of them. You know, probably 25 leases for different businesses. I would never personal guarantee the lease because, well, do you want your business, something happens to your business, do you want them to wreck your personal finances, or would you rather it wreck your business? You know, right? So if you default on something in your business, does it really need to go back to like take your car, take your house, kick you out, make you homeless, or should we protect those things so we at least are okay and we can go start another business? Like, we don't want to screw over our lenders or our landlords or any of those people, but we also don't want to get our lives ruined because of our business, right? So
Mm.
yeah, so
Yeah.
I don't
So,
like.
yeah. So I just want to make sure everybody got what Chad said here. So in terms of, the paperwork and things like that, there are a couple documents here that gets created when you actually take out a private loan, right? So the first one is what we call a promissory note, and it's just saying, hey, we agree to that the loan amount is this. It outlines the term of the loans, the terms of the loans, right? The interest rate, the time period, how it's to be paid back, and the fact that, whatever your LLC is owes money to this private lender, and it's being secured by a piece of real estate, by the house that you're buying. Uh, uh, so when you are, originating or getting a loan done, a lot of times the lenders will actually create that promissory note for you, and a lot of times they kind of have their own standardized document that you can use, or a lot of times the title company will actually have a standard promissory note, or you can, create one yourself. But for the most part, most of the lenders that I've worked with kind of came with their own promissory note. So that's not something you may necessarily need to worry about, generating. Okay. And then when you go to closing table, they will be the funders, just like they would be a normal bank, right? So they pay for the house, and then most of the time, that the rehab funds will be distributed to you as you use it. For some lenders, some of them are really good and you have a good working relationship, they'll disperse all of that money that you need for the rehab up front. Some of them disperse it out incrementally,
No,
depending on how much
no,
it is,
no.
right?
We might be talking about two different things here, because I'm talking about working with individuals who I recruit that I create a private lender. So typically I'm working with people who've never done private lending, and
Okay.
I'm turning them into a private lender. So with this approach, now if you go what Trunk said, and you're going to go against to people who have done a lot of private loans, you're probably going to pay higher rates. You're going to let them use their own
Okay.
documents. They're going to drive the ship. They're going to set the rules. I like to get one step ahead of all that. So that's one of my hacks.
Ooh.
Okay, so this is a golden nugget here. Anybody who wants to take notes, remember this. Okay. Now, what I did is, and this is something I offer my house buying master students. We have documents. So I've already created promissory note, mortgage deed of trust, all these things we talked about. Well, basically those two documents are the things we have in our private lender packet. Now, my attorney has helped me create these documents, and we've used them on all of our loans. So now, if I have the promissory note I generated, it's got my rules in it, my terms. Now, he didn't write it in a way to screw over the lender, but he wrote it in a way where it's not going to put me like at a disadvantage with all those points that I want to protect. Like, I don't want to pay points. I want to pay I don't want to make monthly payments if I don't have to. I will if I need to. But if you have 10 houses you're buying, you don't make any money till you sell them. And if you have to pay mortgage payments on every single house you're doing at a time, and you're waiting for all those to sell to make any money, then all of a sudden now you've got all this money going out and nothing coming in. So I like to protect my bank account. And so a few things we talked about there. So promissory note, I want to generate it. I want to generate the mortgage deed of trust. I want the lender to look it over, tell me if there's anything they don't agree with. Most of the time they just say, hey, it looks great. I want to make sure we have when we do the deal, I don't have a personal guarantee. I want to make sure I don't pay points. I don't pay monthly payments if I can avoid it. And then the last thing is, typically I'm getting all the cash back at closing. So I've never done a deal with a private lender and actually had them hold my funds in escrow. I've always gotten the cash in the bank to use so I can go pay my contractors. I don't want to have to go when I'm working a private lender. Bob's in Hawaii for vacation. I got to track down Bob and say, hey, Bob, the contractor needs paid, and have him release funds from his vacation. I just need to be able to handle it. And that's the thing where it comes down to trust. If you don't feel like you can trust yourself to manage those guys' money, if you're not good with managing money, I wouldn't do that. I would probably maybe have the title company hold it, have your attorney hold it, something like that. But if you can trust yourself to make sure you're going to manage those funds wisely, and you're going to take care of that money like it's your own money, and you're going to take care of that money and make sure those contractors get paid and the funds go where they're supposed to, then do it. That's what I like to do. Okay, so that means when we buy a house, if I buy a house, and I have an example, I didn't prepare it today, but I have an example of a HUD where we bought a house for $25,000. I borrowed $96,000. We got back something like, I don't remember the exact number, $64,000, $68,000, whatever it was after the closing happened. We got 60 some thousand cash back at closing on a house I bought for 25 grand. So my bank account didn't shrink by 25,000 when I bought the house. It actually grew by 69,000 or 60 whatever thousand. So that helps you to keep your business going and not to have your bank account crash in this cash intensive business we call real estate investing. It's like a big
yeah. Eric here has got a question for you, and this may tie into some of the documentation, but also kind of an overall thing here. He said, if I can borrow money from a private lender, what are they getting out of the transaction? Are they taking on more risk than a bank?
Let's take the whole questions at the end, because I want to get through the rest of the training.
Okay, perfect. Okay, that sounds good.
So,
okay.
Let's see here. Where were we? And this, I may go through that anyway in the training right here. So
okay, perfect. Okay.
So risk versus reward. So helping lenders understand their investment. When speaking with a private lender, it's important to compare their potential investment in real estate to other common options like bank accounts or the stock market. So example, real estate offers them consistent returns, often higher than traditional investments, and it's backed by a tangible asset, property they can see and touch. So for example, like if you go and buy Microsoft stock, when was the last time Bill Gates let you go sit at his desk, or he lets you even come into the building? Like if you have Microsoft stock, does it mean you can go into Microsoft and have a coffee at the cafe in the coffee bar? No, right? So, but with the real estate, we're doing private loans on the real estate. You can actually go down to 1, 2, 3, 4 Main Street. And you can go and touch the house that your money's in. I can walk. We can go inside and I can give you a walkthrough of the property while we're in the middle of the renovation. So, it's kind of funny. That was his question, right? He's basically asking what's in it for them, and why should they do this instead of like something else. Basically, if you're in the stock market. So here's a big thing that was drilled into my head when I started doing private money loans with my private lenders and for my deals is, asking this question, what's more important to you, the return on your investment or the return of your investments? Those are two different things. Like if you put your money into something and when you go to get it back, you don't get as much as you put in to begin with, that's not a return of your investment. Or if you don't get your money back at all, for example, right? So, back in 2008, you remember, I don't know if you guys remember this, there was a big economic crash, and there was also an event that happened where Ford, Chrysler, and General Motors went to Congress, and they all had a meeting about the potential possibilities of them going bankrupt and asking for some bailout money. Okay. Now, Ford, GM, and Chrysler, I think the only one that didn't go bankrupt was Ford, or didn't actually file bankruptcy was Ford, or didn't take any money from the government. One of the something of that nature. Now,
It
I
was
invested
Ford.
in. Now, I thought of this. Okay, when I heard this happening, I said, okay, well, I've got some money sitting aside. I want to put some money into. I don't like Chrysler very much, so I didn't put any money in Chrysler stock, but I put money in Ford stock and I put money in GM stock because I knew something potentially was gonna happen really good with their stock prices, and I didn't know what was gonna happen. But Ford didn't take any money, and they actually their stock went way up. And General Motors took the money, and I think they actually filed for bankruptcy, and they actually closed down the stock altogether and opened a whole new stock. And guess what they did with the stock I had my money in? Did they go
Liquidated
and
it.
did they transfer that over and put that money to the new stock for me? Did they give me my money back?
Probably not.
No, the stock went to zero. It was like, oh, thanks for the money. Good luck. And I was gone. Right. But luckily, the amount of money I made on Ford, like, covered up the losses I made in GM. So I was okay. But, if had I known more at the time, I might have just put it into Ford and then I just made a profit. But I didn't know what was going to happen. I didn't know for sure. So I just put it in both of those. But so that's for the example. Now, if you approach your investor with this risk of, hey, what if your stocks actually don't make any money and actually lose money, or they go to zero like that one did for me? Like, wouldn't you rather have a piece of real estate that we're buying at 30 cents on the dollar, that if you ever had to foreclose, you could go and sell it for twice what you put into it? Wouldn't you rather have that? Wouldn't you rather be able to go down and walk down to 1, 2, 3, 4 Main Street and put your hand on the house, drive over there and let me walk you through it? See your investment money at work, and then get all the benefit of actually getting some experience points, watching over my shoulder. One of my biggest hacks when I first started flipping houses was I was wholesaling houses, and I would go over to one of the guys I wholesaled houses to, and I would watch what he did to the rehab. I would see him spend his money and buy the granite and put all these fancy, upgrades on the house, and watch how he did it and learn how he found contractors and where he got supplies. And then once I realized, I could do it too, and I had enough knowledge from just doing that, I started going and getting my own stuff and doing my own rehabs, and stopped wholesaling houses for $5,000 fees and making $50,000 and $80,000 profits on my flips instead. So that's what that little being able to look inside of a property, going over and talking to the guys and watching. I would go over there and hang out with them on the weekends and just see what they're up to and what tile they're using and all that sort of stuff. And being able to do that is a real big value. Like, your investor, your private lender, could do the same thing. He could go over there and learn from you and see what you're doing. So later, when he does his own rehab, he has the experience through you of what to do and what not to do, versus having to figure it out on his own and potentially making big mistakes. And they always say it's better to, would you rather learn from your own mistakes or someone else's mistakes? Would you rather lose money on your deal or let someone else lose their money and then you learn, oh, I'm not going to do that because that didn't work so good for him? So that way you can learn from someone else's experience, then you're a little bit ahead instead of, having to figure it out on your own. So that's a big
Yeah.
value if you
I
can
think
sell that to the investor.
yeah, I think that's super important because unfortunately with real estate, the mistakes you learn cost you quite a bit of money,
They can be
right?
big
It's
lumps
not.
on the head.
Yeah, it's sometimes, unfortunately, when you make these mistakes in real estate, it's 5, 10, 15, 20, sometimes 50K, right? And so, when people talk about, trying to learn from other people's mistakes, how do you do that? One of them is taking courses, right? And others are learning from a coach like Chad or myself, or somebody that can hold your hand through some of this process and actually help you navigate some of the pitfalls that most new beginner real estate investors encounter, and can, on one decision or one check of what you're doing could save you literally $10,000 or $20,000 for making a one simple error that you just overlooked. And
so
that's
so
one
what
thing that makes it scary.
so what you just mentioned was interesting, because that's what I did. Was I hired a mentor, right? I learned from my mentor, and then I had more knowledge than my borrowers did. So I took some of that knowledge I got from my mentor and I passed it down to my lenders. I say borrowers, but my lenders, right? So my private lenders became my students, And I actually taught some of them how to go out and get their own deals. And then they started using their own money in their own deals. But for a while, I used their money in my deals, right? So you can, these people, like I've had multiple investors invest with me just because I had more knowledge than they did. They wanted to learn from me, and they looked at me as someone who's out there doing it when they just wish they were, So there's a lot of people that go to those RIA meetings who are like, walking around with pocketfuls of money, and they don't know where to find a deal because they've never done any marketing, and they've talked to the wholesalers and they don't seem like good deals, and they just never get a good deal. So, yeah. So, I mean, that's what you want to do is leverage your investment into your own mentorship and pass that knowledge on. Use that knowledge you get, even if you're just a little bit ahead of your lenders. Well, pass that knowledge on as a value to them. So, common ways lenders fund deals. So private lenders often use a variety of funding sources to invest in deals. So here are some common methods they use to fund real estate investment. So, and now with this section we're talking about right now, I should have mentioned this earlier, but one of the things we want to do when we're recruiting new private lenders is actually sit down for coffee, maybe buy them lunch. And my training, I want you guys to grab the lead magnet because I go more into detail about how to structure that, how to set that conversation up. From like maybe meeting them at a RIA meeting, setting up your coffee meeting, and then having this conversation we're going through right now where you're going to actually interview the lender and find out some of these things we're talking about. So right here, one of the things you want to find out when you're meeting with a lender after your initial meeting, you're having a more of a serious sit down with them, buying them coffee, buying them lunch. Okay, is you want to know like, well, where do they have their money now? Like I kind of mentioned that earlier with Chung when I role played with him, and I said, well, where's your money at now? Is it in? And you said, well, it's in the bank earning 1%. Okay, so I should have followed up and say, well, okay, great. So you've got X amount in the bank. Well, now, what do you have in there? Is it like 100,000, 200? How much do you have sitting there earning 1% right now that you might want to put into real estate? And your number, just throw a number out there, right? So
$200,000.
okay, 200. Cool. Okay, awesome. So then, additionally, have you ever considered now? Do you own any real estate right now?
No, I don't.
Oh, okay, you
I
don't.
want
Okay.
to.
Okay, cool. Okay, so you don't have a personal residence.
No, I'm just renting
Okay.
right now.
Okay, cool. Okay. Well, sometimes people will be living, they have a personal residence and they actually have a equity line of credit, which can be something you could tap into for private money loans. Because some of these people have a home equity loan, and I don't know what it is today. It's probably higher, but it used to be where it might be like 2 or 3%, or maybe it's 6 or 7%, or maybe it's 5. And now say they could go out and write you a check for 100 grand and get a 5% loan. That's a tax write-off for them. When they go to pay that back, they're going to get a tax write-off for paying the interest on the loan. But now also maybe they charge you 6 or 7 or 8% or whatever they feel like it'd be worth it to tack a little bit on to make a little bit of money on it. So they're participating in, they're making a little bit on their home equity line. Okay, so you can find out that. Ask them, well, do you have any home equity lines or any property that you might be able to access equity in? Okay, and then you can talk about that. So we're interviewing them. We're finding out where all their money is, right? We're doing a quick we're having a quick little discovery session to figure out where all their funds are. Okay, personal and business credit lines. Do they have any of those? Okay, liquidated securities or investments. So any stocks they could sell off, any bonds, any mutual funds, anything like that. Maybe there are times when people are jumping out of the market because something weird happened, and all of a sudden they just want nothing to do with it, and they just want to get it all out and move it into real estate. And one of my investors did that actually. I went down to one of his stockbroker's office, and we went and had the meeting of, hey, he's pulling his money out, putting it in my deals, so that's kind of a fun meeting. Retirement accounts, self-directed IRAs, and other retirement and investment accounts. So like if where Trung's at, they have Quest IRA and different people like custodians where you can actually go down to their office and you can meet the people who have accounts there, and they'll have networking meetings and things like that. And you can go and find people who have IRAs that have money sitting. And I remember one time Quest told us they had like $1 or $2 billion just sitting idle at any given time. And that's a lot of money that could be going into deals. So no shortage of funds there for that. So a tip on this area here is make sure you're aware of these funding sources when pitching to your lender, when you're interviewing them. So you can allow you to tailor your approach based on how they prefer to invest in it. You can help. One of the things you really want to know is like, what does each of my lenders have access to? Because if like Trung's got say 400,000 and Bob's got 300,000 and Sally's got 600,000, we do the math. We've got, I don't know what I just said, but like 1.3 million altogether. Now, if I got 1.2 million out and I have a $300,000 loan I need to fund, I don't know. I got to know where these people's money's at. I need to know what's available to me at any given time. And maybe they have something they didn't tell you about where you can tap into more, but you just need to keep a little bit of a idea of how much you have access to with each of your lenders, so you know when you've tapped it out. You know if you need to go out and recruit more. So next section here. So common questions lenders may ask when you're working with private lenders, and they're bound to have some questions. So be prepared to answer them with confidence. Here are some common questions you'll likely hear. So what if something happens to you? And you could even make this as part of your presentation and say, earlier we talked about those documents. So we're going to have hazard insurance in place. You're going to have a mortgage in place and a promissory note. Now, if I happen to get hit by a bus, then you have the ability to go and get that property back because you have a mortgage in place, right? So you could tell them that before they ever ask, and that's a good way to do it. What if you don't sell the house for what you think you will? Okay, well, that's on me. So I'm basically, if I am buying the house for 100, it's worth 300. We put say 50, 75,000 into the rehab, and now I've got a ability to sell it for $100,000 profit. Well, what I'm going to do is if I can't sell it for 300,000, I have to take it for 270. I'm going to take it and discount that down. I'm still going to pay you your full interest, but I'm just going to take a $30,000 less profit. What if I can't fund an entire deal? So, well, if you don't have enough funds to fund the whole deal, I can always get another borrower. We can put them in second position, or another lender and put them in second position. And that way we'll have two lenders on the deal, and you'll both have your own position protected. Okay. And I actually had one time where one of my lenders, she had a partner, life partner, and her and her wife had their own money, but they wanted to go into one position as partners. And so I let them, because that's okay. You normally wouldn't want to let people do that if they're not related or not, not partners, because you don't want to put two random people in the same position. Like you wouldn't want to take $50,000 from Bob and $50,000 from Joe, and Bob and Joe don't know each other, and just park them both in first position. And then all of a sudden something bad happens and they're like, what in the world did you do? I can't get my money because Bob had, I don't like Bob or whatever. We can't get along. We don't know each other. So you don't do that. It's not even, I don't think it's even legal. It used to not be legal. It's probably still not legal. So the only thing that might be a difference is I think they opened up some things when Obama was president around crowdfunding, but yeah, I don't know.
Can you explain real quick before we jump any further what
Yeah.
first position versus second position is? Because
All right.
for a lot of people may not understand what that fully means.
So first position, let's just say, I need $100,000 to buy a house. And let's say one of my lenders has 70,000 and the other one has 30. Okay, that's 100, right? So if I borrow, and I would always do this, if I'm going to put lenders into my deal that don't have all the money, because I can't just go to Bob because Bob only has 70, right? And I need to borrow 100. Okay, I can't buy the house with 70. It's not going to work. So I got to go get the other 30 somewhere. So I go to Bill. Bill has 30. Okay, so now I would not feel right putting Bill in first position because he only has 30,000. So typically the lender that's putting the most money in, I put in first position, which means they have the first right to foreclose. That means they get paid first if something bad happens. Like I don't pay them back and they have to foreclose on the property. Then they can do that and they can go sell the house. And the first person that gets paid is the first position lender. So if, let's just say, for example, something really weird happened and they could only sell the house for 70,000. Well, the first lender would then get paid, which is not good. So that's why we always want to buy them at deep discounts. But so if they both had to foreclose, we want to hopefully have a house that's worth more than $100,000, so they both got paid back. Now, if there's a first position, he gets paid his 70. Whatever's left goes to pay the second position, right? Does that make sense?
Yeah.
Okay. And when I was first finding private lenders, I couldn't find anybody. I didn't have anybody who had a lot of money, so I had a bunch of these people who had a little bit of money. One person had 30, one person had 50, one person had 100. And on one deal, I ended up having 5 lenders involved. So I had the 2 ladies who were partners. There were 2 in one position. I had a first, a second, a third, and I think we had a 4th position in that house. And my title company did not like it. They were like, don't ever do that again. I said, well, I did what I had to do because I needed to buy the house and I made it happen. They were like scolding me for it. Like, don't do that ever again. Like, okay, well, let me go find someone who's got more money. And my real estate coach at the time, she said, your goal now is to go out and find somebody who has $1 million. If you have a lender with $1 million, you won't be in that situation again in your market. And so she had me change and she also said, you need to find 3 private money lenders. So she had me change my password for something that's like a low risk site where, if it gets hacked, it doesn't matter. But it was like, make your password 3PML. That was what and now don't go try and hack me because I don't use that on anything. But at one time I used it for one account. and I used to log into this thing every day. It was one of the training portals I was in for the coaching, but she said, change your password to 3PML. So every time you type it, you think in 3 private money lenders. It was like this little subconscious, almost like anchoring, hypnotic suggestion, of like, well, I'm going to have 3 private money lenders soon, right? So that goal was always reminded. I was always reminded of the goal. And before long, I had my $1 million lender, I had a $2 million lender, and I had 10 private money lenders. So, and I've raised almost I think about $5 million in total capital for private money to be able to access. And, in my price points, I don't need more than that.
Yeah.
So we're see here. So the questions, we got sidetracked here. So, what if I have to pull my money out? So that's a question. Sometimes people will say, well, like, what if something happens? I need my money back. Well, then what I would tell them is, hey, I'm going to go find another lender. One of my other lenders, I'll just swap you out if I can. I'll work with them. You'll have to be a little patient because it might take me some time. But if I get in that position, what I'm going to do is I'm going to talk to one of my other lenders, see if they'll go ahead and put their money in and let you out of the deal. We'll just pay you back. How's that sound? So I would probably ask them if that's okay. If everything sounds okay when they're asking you these questions, that way, that you handled the objection and they don't have more concern about it. Can I think about it? Sure. I don't need your money today anyway. And that was one of the things we'll talk about later. But when you talk to these lenders, don't ever go out looking for these lenders begging to borrow the money. Like, you don't want to be needy. If you come across needy, they probably won't want to lend to you. If you come across and say, hey, I don't need the money, even if you don't feel like it's true, say it anyway, because you're going to be getting more people that are going to want to put their money in your deals. If you tell them, hey, I don't need the money, all my deals are covered, everything's funded, I don't need it right now. Don't ever try to borrow money from someone on a first meeting. It's actually illegal. You want to do it after you build a relationship and you have became friends with these people, because these private lenders are supposed to be people you're friends with, not just people you're soliciting. So don't run ads for this. Don't go buy a billboard saying we'll pay 10% and beat the banks in my private money loans, because that's not legal either. Okay. 10 minutes left. Okay, cool. We're running short here, guys, but I'm almost done. So we're getting close. So can I think about it? Why isn't everyone else investing this way? Well, not a lot of people know about this. I mean, it's not a traditional thing. You're not taught about this in school. Your parents don't know about this. It's one of these things that's happening that nobody really understands or knows about. But when we take advantage of this and use it in our deals, it can be very powerful. So your ability to answer these questions clearly and confidently will set you apart and build trust with your lenders. The more you prepare, or the more prepared you are, the more likely they will want to invest with you. Okay. So, terms and conditions. Okay. Terms and conditions offer the lenders. So when you're finalizing a deal with private lenders, here's some standard terms that will make your offer more attractive. And now, that's one thing that's good to refer things to is like, it's pretty much standard. These are the standard documents. These are the standard rates. So when you present things in that way, if you act like this is just normal, then people will go with it. But if you leave it open to negotiation, interpretation, it's going to probably not be in your favor. So interest rates can be anywhere from 8 to 12 with no points, which makes it competitive with other forms of lending. And I've been able to get funding for as low as 4%, no points, no payments until the property sells. So lien positions offer either a first or second lien position to give them lender security. Payment terms, 12 months with no payments and a fee with the option to renew. So you could put in there that, after 12 months, we'll, if we need to extend the time, that you'd pay a fee, and that'd be okay, probably. Now, what I typically do is I structure these loans in a 12-month structure. So that way, we don't need to go out and renew these loans. Or my dog's needing, okay, I guess my dog's going to go break out of here. She just took off. Okay. She just tore my door open. Must be a noise. So 12 months. So what I want to do is structure the loan in a 12-month term. So that way, if in any case, like maybe we don't get the deal, maybe we think we're going to take 3 months to get the deal rehabbed and sold, but it takes us 6. Well, we've got a 12-month loan, so we're not in a situation where we've got to go and talk to the lender and say, hey, I need to extend my loan. So it gives us plenty of time that way. It prevents from having a whole lot of extra fees. And if we sell it early, we pay them off, and we only pay for the time we used. So the interest on these loans is figured daily, 30 days in a month, and it's prorated for the time you use it typically. So some people like to give their lender a 90-day minimum. I never do, but if you think you're going to be selling houses in 2 weeks, you bought it today and you sell it 2 weeks later, which I've done, you may want to give them a 90-day minimum or 60-day minimum. But all right, so these terms give your lender peace of mind and flexibility, making them more likely to invest in your next deal. So Um, so who's ready to use these tips in secure private lending and close more deals? Type ready to fund in the chat. If you're ready to start using these strategies with lenders. A few things left here. Yeah. So a few things here I wanted to go over. So I have a Facebook group as well. If you guys want to join, I can drop the link. It's 7-figure real estate investors. And I can drop the link in the chat here for you. And then we also have a free a guide here and another training you guys can download for a little bit more details on how to actually do this. So how to actually raise money with your private lender. So you can get my free private money script. So I have a free private money script where I show how I've raised over $5 million to fund my flips. And it goes over things like how to raise private money without using your own cash or credit, how to avoid getting overcharged by hard money lenders, and how to fund your deals without borrowing money or without begging your friends and family to lend you money. So a lot of people, they are reluctant to go out and try to raise money because they feel like they're begging and borrowing. And I've heard people have that objection, like, I don't want to go ask my friends and family to borrow money or beg them for money. And what you have to frame this as is actually an opportunity for others to make money versus, begging and borrowing your friends for money. So if you can frame it in a way that you're like a stockbroker and you're allowing them to invest in the stock of your house, you're actually a broker that helps people invest in real estate. That's in your mind. That's the game you play. Okay. And if you can go out and find people who want these opportunities where they can put money into your deals and make money doing so, then you'll have a lot more success than if you feel like, hey, I'm just begging and borrowing people begging people to borrow their money, and you feel like you're, lesser for it. This is actually a great opportunity. One of my agents actually was like disappointed because I never asked her if she wanted to be involved in my deals. And she saw the HUDs whenever I'd sell houses. She'd see like, well, Mr. Smith got a $30,000 payment out of this deal. Where'd that go to? Oh, that was for the private money loan. And she sees that on the HUD and she's like, hey, Chad, how come I'm not getting any of this money? Like, why aren't you offering me these? Well, I'm not good. My money's not good enough for you, huh? So now that I've got people like begging me to let them in my deals, and all of a sudden she's putting 150,000 in to cover one of my purchases. So I don't know if you've ever had anything like that with any of your deals there, Trung, but it's kind of cool when you've got these people that are like, you think that you're a slimy guy for being like, hey, let me borrow your money. And they're like, hey, you're a jerk for not letting me, not even offering it.
Yeah, I've actually had that as well, actually. So we had about 5 or 7 lenders that kind of, we rotated through, and each of them probably had 300 to 400K each. And yeah, they would be calling us, asking us like, hey, when are you going to borrow some more of our money?
Uh,
Like they were literally, saying, hey, we like you. We like how you borrow and how quickly you pay it back, and, you're reliable and everything. And because for a lot of lenders, it's about a trust thing, and they want to work with people that they worked with before. And so, like, if you get a good working relationship, they're going to want to keep lending to you because it's less risky for them. And it's like, just as much as you don't want to go running out, finding new lenders, they don't like running out trying to find new borrowers. It's the same thing, just reversed. And so when you form a good relationship, it helps both parties a lot.
yeah.
But I
Yeah.
love how you talked about how you position yourself is it's an opportunity for them to earn more money on their money, and it's not a lopsided relationship where they're at a huge, advantage and you are at, in a superior or inferior position at all.
Yeah. Yeah, for sure. Yeah. It's a really awesome, one of my private lenders, he actually first started flipping some houses. I taught him how to do that, taught him how to market to get deals. And then he ended up making like a whole private money lending business out of it. Now, in the beginning, when I brought him the idea, he's like, well, I don't really want to be a lender. I just rather do my own deals. And in the end, he's like, I don't want to do my own deals. I just want to be the lender. Right now, he's got several $1 million lent out. He's in his 80s, and he's like, Chad, I'm really fortunate that at my age, I'm living off the interest off of my money. And most of my friends have already been tapping into the principal, and all of them, actually, their money is going down in value. So he said he's able to save from his private money lending business. He's been able to put $20,000 a month in the bank.
Holy moly.
Saving. His money is growing every month by about $20,000. And he and his wife live in a house that's paid for. He's one of the cheapest guys I know. Like, he won't spend a dime. You know, he's the kind of guy, if he's going to take you out for a treat, he's going to take you down to the oil change
Phillies.
place, get a free cup of coffee, or over to the dealership and get a free bag of popcorn, you know, from their waiting area. He's like, that's what he does. And but he's got several $1 million. You'd never know it.
Yeah. All right, so we're kind of at the top of the hour now, and just wanted to, was there anything, we didn't see any other comments here, but
Oh, yeah.
any last words you want to share with them?
Yeah. One thing, I dropped the link for our private money script and training in the chat. So if anybody wants that, grab that, go over and check it out. Let me know what your thoughts are on that once you've gone through it, if you would, and put it to use and start raising some money. My challenge to you is go out and get your first million in private funding lined up. But beyond that, we could also just open this up to Q&A. If there is anybody here that's got any questions, put them in the chat. And I don't know if
I don't think we have anybody else on right now.
Okay, that's no problem. So, people watch the replay, they can go through and leave comments in there. We can address those later. So,
Yep. All right, Chad. Thank you so much, brother. It's been absolutely amazing. And I mean, I've learned a lot myself here, and I knew I was. So thank you. Thank you so much for your time. We really appreciate it.
Yeah, appreciate you having me on, and everyone in the group. We're good luck to you in your future, and see you on future trainings.
All right, man. Thank you.
All right, later. Thanks, Sean. Bye-bye.